Hi everybody, in this video, I'm going to just discuss the investments that we're making into, it's $1 million round total. So we just joined up a syndicate of investors to invest in a deal. And being on the other side of the investments, I'll provide some insights. And a lot of people who are watching this may be investors, but for those who haven't, just to provide some insights on why this deal was a no-brainer for us and why we chose to invest. Because perhaps when you're trying to raise money, if you want to acquire more businesses, you want to acquire more assets, real estate, and own more assets, the reason why you should probably pitch your deal differently could be because your deal is not a no-brainer. And the reason why we invested in this deal is because it's a no-brainer. So I'll give you context. The reason why this deal was a no-brainer is because mainly the deal is getting listed. I guess the team and the person that I knew on the deal, I knew the person for quite some time. I knew him for about 6 years, and he helped me, in a different situations as our company was growing, as we're going through new challenges, and I've seen him for years. So I had a relationship with him, right? And so I knew him for quite some time. So that's one thing. The second thing is the thing with this guy is he had done the thing that we're looking for. So we're looking for somebody that could actually take deals public, but he actually successfully has taken many deals public. I believe around 6 or more. And that's not to say that he's going to actually end up taking this one public. There's no guarantee. The probability is really high that he'll be able to. He has a lot of experience taking deals public, so he has proof that he can do the deal and manage the deal well. And as I said, it doesn't prove that there's a guarantee. It just lowers the potential of there being a failure and him doing so and executing his task well. So that's the first thing, right? The second thing that we look for, and the second thing is it's mainly the probability of making money is very high in a very short time horizon. So it's a deal that's about to go public, and I guess that's the target goal. And I'm very familiar with the go public process, but not to the extent that he's an expert. And he worked in public markets for quite a while, taking deals public. So because he's to take deals public, and I know that the return on a deal that goes public is substantially higher than a deal that doesn't have that much liquidity and that many options to sell, it's way better to work on deals that make you a lot of money in a really short time horizon if it's in line with your risk tolerance. So the risk tolerance is that. So that's the second thing. And the third thing is I can see myself being I can see the risk reduction. So even if they don't list, it's possible, and speak with a lawyer and check with the laws in your land, but it could be possible to have agreements with different stakeholders depending on the details of it to see if investors can buy back your shares at a later round or at a later time. So if you buy shares or units in the deal or whatever, if you buy part of a deal and you have somebody else agree to buy your shares at a later point in time, that adds additional insurance and security to make sure that if your deal doesn't get listed on the stock exchange, you have an exit strategy. So I guess the 3 points. Number one, I knew this guy for quite some time, and I spoke to him for 6 years, trusted him, and saw him I haven't seen him in person until, I guess, after the posting this video. Number two, the probability of making money is really clear, obvious, and clean in just a go public deal and just looking at the valuation of the deal. And then number three, even in the worst case scenario, there's some steps to mitigate the risk of me and the company losing money in this investment. So if you want to raise money for your deal, but you're helping people acquire real estate, just make sure that you work with people that know you for a while, or work with people who know you. So you don't have to know the person directly, but the people you work with have to know you. That's number one. Number two, make sure that the deal is just clearly going to make money. If you have to think more than 5 seconds about how the deal will make you money, then it's not good enough. It has to be blatantly obvious on how the deal will make the investors money. Is this something that you would invest in? Is this something you put out to take part of your portfolio and invest in to make money or to preserve your money? And number three, what have you done to reduce the risk so that it's an obvious yes from an investor. So if you like this video, let me know, and make sure that you apply the strategies, and we'll see you in the next video.